Good evening, everybody. All right, after we do kind of the analysis of the market, which also includes this resistance level that we're seeing in the Dow, we're going to show a lot of trade setups where we use candlestick patterns to tell us when the big, powerful breakout moves are about to occur. So with that, we can see what happened in the Dow today, down 100 points. And look at the nature of this market. I mean, just down, up, down, up, down. I mean, it's kind of very frustrating to trade. The only thing that's making for a conclusive strategy is you have to start just sitting with some trades, especially over in the NASDAQ side. You can see how we have a trend channel in progress. So even though it traded lower today, it didn't do anything to distract from this channel. Now, doesn't mean it won't pull back for a couple of days and come back up, but if the overall trend is in the upward direction, that is very evident that there is not any great selling pressure in this market. Now, even though that might seem no video, if you're not getting video, go up to the very top right-hand corner of the page. There's a red X in a circle. Click on that, log out, and come right back. Log right back in again, and you get a better connection. Let's see. You can hear, and RT has no sound, but have video. All right. Okay. So with that, yeah, the great Oz. Yeah, we will be recording this tonight. Yep. So if you're having problems, obviously, if you're having audio problems, you're not going to hear this, but if you're having video problems or visual problems, go up and click on the red X and then come right back in again. Okay, so what was I saying? Oh, so as long as this uptrend is in progress, you kind of have the assumption that there isn't any major change of investor sentiment. So in a market like this, it's not unusual to see one index up while the next index is down. I don't even know what the transports did today. And transport's not doing much of anything. And these things just drive me to drink. So we're not getting any real negative nor positive move on the transportation. So the conclusion to all this is, if there's no real massive selling, the pattern breakouts are what are going to be the very strong price moves. Because if the candlestick signals and patterns are the development or the the development of bullish sentiment, they're usually going to be much more conclusive because it's an existing or it's a concurrent type of buildup of investor sentiment, no matter which way the market's going. So I guess the other way it can be said is the strength of a pattern is a development of investor sentiment with disregards to what the overall market is doing, which gives you a much better prospect of big price moves. So we're going to kind of show where the breakouts occur. Now, I'm going to hit some of the ones that we're already in. Look at your fry pan bottom, your cradle pattern, and the breakout above the resistance levels, in this case the 50 and the T-line. So here's where you put 2 plus 2 together. This is just kind of logic, that if we know what the signals are telling us and the patterns are telling us, and if they're occurring in the oversold area, the probabilities of a very strong price move is based upon identifying a pattern setup, like a cradle pattern, which is why we recommended this one. Do we forget what they did? Did we recommend that one today? Yes. Or did we? No, that was 2 days ago, based upon this cradle pattern. So another one that's starting to look good because of a cradle pattern Well, what happened there? Oh, that's because I can't read my own handwriting. AVDL. Look at the cradle pattern setting up. Cradle pattern type scoop. This makes positive trading a very high probability result, especially if it gets back up through this level, the handle of that scoop pattern, plus confirming your cradle pattern. So what makes up the cradle pattern? This flat series of dojis. That is what makes it evident. We also use the wave 1, wave 2, wave 3 based upon supporting right here on the 50, gap up through the T-line. Now when it gapped up through the T-line, bouncing off the 50 with stochastics coming up, what else did it kind of reveal to us? Well, it gapped right through this downward channel, telling us wave 1, wave 2, wave 3. Wave 3 may have the prospects of taking us pretty close to the 200-day moving average. Essentially, what we're looking at when we're identifying human nature, which occurs the same way time after time, is that we're just looking at the patterns that we know are a high probability setup based upon the reason we're looking at the patterns in the first place is because human nature creates patterns. We've been going after nail for two reasons. One, because it's a Shazam. First of all, we can see the reversal, the breakout through the 34, coming back up to the top of the channel. And the factor on nail is it's a 3 leveraged leverage 3 times, or 3 leverage, which means when it's moving with much more excessive strength because of the leverage. We also recommended CLDR because look at our morning star signal, left-right combo, close above the T-line, and then we had the double doji sandwich that broke through this level. Now, why is this relevant to us? Well, first of all, that's a strong buy signal. The doji sandwich is also a strong buy signal. And the fact that we can see that on a strong buy signal, it broke through the 200 with strong buying indicators, what's that tell us? That tells us everybody and their brother that's usually watching what happens at a breakout level is going to start buying. Gives us a little bit of a head start. And then what do we expect coming off a doji sandwich? More upside. And why would that be confirmed? Again, 2 plus 2. If everybody else is watching what's happening at the 200 and we see there's strong buying to get through that level, gives us that much more probability that uptrend is going to be in progress. When did all these recommendations occur? Oh, let's see. CLDR, we recommended that one yesterday. Was it yesterday? What is today? We recommended that one today because of that breakout. I'm just reading back through when some of these were recommended. And for example, our NVST, I put out 2 or 3 stock picks every night. Not so that people have stock picks, but we put it out in a video format to show why that's being recommended. The old, we want to teach people how to fish, not just feed them fish. So we put out these recommendations, 2 or 3 every night. Now some don't execute because that's when we put in the recommendations, we will say when to buy it. For example, we recommended this today. But it would have been on the basis of a positive open. If it opened lower, what was it telling us? The bullish sentiment isn't there. So not only do we want to see buy situations, now we're still recommending this one if it comes back up through this level. Because what do you have? You have your best friend breakout of a fry pan bottom and of a big wedge formation. That any buying from here tells us this whipsaw action was indecision. But if they come back up through this level, that tells you the best friend signal breakout is still in progress. What does the specifics for a double doji? Just 2 dojis in a row? Yeah, usually I'll find some more double dojis, Jake. Usually you don't want to, or what happens is, remember what a doji represents. It represents indecision. Now I can't remember which one we were looking at for the double doji. Was it CLDR? Yeah. So we have a doji rule, which is very simple. The price will usually move in the direction of how they open after a doji. So there's our left-right combo, strong reversal signal, close above the T-line, then a doji. If we were buying on this day and it traded as a doji, we still had a trend analysis. If it opened positive, it was going to move in the direction how they opened it. So usually we're looking for a doji sandwich, which is a big up day, a doji, then another big up day. Usually this up day is the same magnitude as this day. Well, in this case, we have 2 of them in there, so we call it a double doji. What trend lines are in your chart? The red line is your 200-day simple moving average. Your blue line is the 50-day simple moving average. The reason those are on the charts is because every major money manager around the world uses those moving averages to make their decisions about their portfolio. We use it to see exactly what the investor sentiment is doing at those levels. This gray line is the 34 EMA. Call it a secondary indicator. It works reasonably well as a support and resistance level. But here's your most important one. The black line is what we call the T line. It's got a very simple, it's a very simple analysis, but it's probably the most powerful trend indicator that you're going to come across. And basically it says if you see a candlestick buy signal and a close above the T line, you can stay long as it doesn't close back below the T line. In our members area, Marino, we've got a place that says stock picks. You go there and you listen. It's usually about less than a 2-minute video telling you what the telling you what we think the market's going to do, If you see 3 longs, that means we're kind of concluding that the market's in an uptrend. 3 shorts, market in a downtrend. 2 long and 2 shorts means the market's moving sideways. You have to see which way it's moving. The T-line is unproprietary. It's the 8 exponential moving average. And it acts like a Fibonacci characteristic. So the most powerful statement that I usually provide for people when I'm doing training for other investment groups is that if the T-line is a natural support and resistance level of human nature, and candlestick signals are the graphic depiction of what's going on in investor sentiment, when you combine the two, you've got an extremely powerful, high probability combination. Okay, let's see. Any way to tell after a large candle in a doji if it's a continuation or a reversal? Yes. The simple doji rule. The price will usually move in the direction how they open after a doji. So if it opens positive, the probabilities are it's going to go positive. The light green line is the 3T line, 3 exponential moving average. It works in 2 factors. One, if you see a candlestick reversal and a close above the T line, if the 3T line comes up through, that's that little bit more of bullish confirmation. And secondly, the further you move from the T line, the caveat to the T line is that the further you move away from the T line, the higher the probability it's going to come back up and test it. So that means the further you move away from the T line, the more effective the 3T line becomes. Again, this is all just based on one simple factor, that the Japanese rice traders illustrated to us what happens normally in human nature, and that's what makes prices move, or that's how you can identify price moves. If it opens after a doji and trades positive 5 and 10 minutes, can you buy it with the opening of the day? Jake, if it opens after a doji and trades as positive for 5 minutes, can you buy it with the opening of the day or the low of the doji day as a stop? Yes. Or you use the doji the previous day as your stop. RB depends on what you're trading. If you're an intraday trader, you can use the, if I'm trading soybeans or cattle or the hogs or the dollar intraday, I will use a 1 minute, 5 minute, 10 minute combination, with my 10 minute being the bellwether. If I'm a swing trader like I am on stocks, I'm using the daily chart. My stochastics are slow 12-3-3. Nothing set in stone. I just sat one night many, many decades ago, I hate to say how many decades ago, and just kind of fudged to see when was at the bottom, was there a bottom in the stochastics? When there was a top, was there a top in the stochastics? The norm at that time was 14.55, and that was a little bit too slow for my swing trading. So 12-3-3 for the last 3 or 4 decades has worked very simple. Very simple. I was reading very effectively. Doji yesterday, gap up today after a 50-day moving average. You can make $7 on. Yes, we'll get to some of those. The 3T line, I don't use the 21-day. We got the 50 and the 200. Simple moving average. The 34 is an EMA. You can see how it works somewhat effectively. And then the T-line is the 8 exponential. That's the most important. I could take everything off this chart and leave the T-line on here, and it would work very well. How do you account for long-legged signals in positioning stops? I'll have to show as we go through. Hold on to your individual stocks until I tell Jim to do the double line at the end. Is there a higher probability of being successful in buying and low? Yes. Very simple logic. The Japanese rice traders say if you see a candlestick buy signal in the oversold condition, the probabilities are pretty strong you're seeing an uptrend. If you see a candlestick sell signal in the overbought area, you probably have a very strong probability you're seeing a reversal, which means a candlestick buy signal in the overbought condition doesn't mean very much, and a candlestick sell signal in the oversold area doesn't mean very much. A signal is a signal when it's occurring in the appropriate area of a trend. You can put it on here. Some people have the 20. I use the 34 now. But as you can see, there's only these two major indicators, the 20 and the 50, to see what everybody else is doing. Along here, we're going to be, again, here until the Marvell. We recommended this one because you can see the buy signals, a piercing signal, a gap up through this resistance level, and through the T line, wave 1, wave 2, wave 3. We've got a lot of stocks that have been working very well. That just a very simple rule. Oh, thought I'd swing right into it. That once you see the breakout, there's our little bobble breakout. There's our fry pan bottom. There's our bobble breakout. A bobble breakout is a J-hook pattern, but you can see it occurring right smack dab at a visual resistance level. And then you can see the T-line. Notice the concept. There was a candlestick sell signal, but it didn't close below the T-line. So how long do you stay long on this? As long as you don't see a candlestick sell signal and a close below the T-line. Again, this is not rocket science. This is just simple analysis of what occurs in human nature with the signals and the T-line acting as a support level. If we use Bollinger Band is applicable with T, yeah, use whatever you want. The most important factor on a candlestick chart is the candlestick signals and patterns. Whatever you want to add to enhance the improvement of those of your analysis, go ahead and do it. If somebody says, oh, put the XYZ indicator on, if you put it on and it doesn't work for you, take it back off. We know the one basic is that the candlestick signals and patterns work, or we wouldn't be seeing them 400 years later. Raj, if I see a candlestick sell signal, or if I see a close below the T-line, but no sell signal, if it opened lower the next day, I'd probably close it out, but I'd be prepared to buy it back if it came back up through the T-line. Do you see a T-line crunch with 200-day settings up with a SPY? Ask me that when we go to the live charts. Let me go through some of these just so you can see what the rationale, and then we're going to get to the ones that really break out. Look at our buy recommendation on EBIX the other day. Our best friend signal, the gap back up through the T-line, off the 50-day moving average. So this is where the logic comes in. If you see one of the strongest signals, which is your best friend signal, and a close above the T-line, the probabilities are pretty strong that not only are you going to be in an uptrend, but because of the best friend signal, it's going to be a strong uptrend. So essentially every time we see a signal and a close below or above the resistance level or the T-line, that tells you our probabilities are pretty strong we're heading in that direction. Now, does that mean it's a guarantee that it's going in that direction? Absolutely not. It just tells you the probabilities are pretty strong. We were recommending ADEI as an option trade had it opened positive today. Now, this is the nice thing about the simple rules of candlestick analysis. If we see a strong buy signal, what do we want to see the next day? We want to see additional confirmation. If it opens lower, what's it tell us? The bulls aren't there. You don't want to be jumping in just yet. Would we still, with it not confirming, would we get rid of this chart? No. If it bounces and comes back up through this level, it's telling us our breakout is still it's still occurring. Please point out the candlestick. Does it have different looks? Please point out the doji. Oh, the doji is any day that looks like this, where there's a very, very small body and the tails. What one were we looking at? Let me make this bigger. These are doji. This is a hammer signal. There's 12 major signals, 6 longs and 6 shorts. Now, those are the 12 major signals out of the 50 or 60 candlestick signals in the candlestick universe. I've narrowed them down to 12 so that if you're trying to learn candlesticks, the 12 major signals are your bricks and mortar, your ABCs. You don't have to learn all 50 or 60 candlestick signals because most of them don't occur often enough to spend mental time and energy to try to learn them. If you learn the 12 major signals, you're going to have more trades and you're going to be able to see much more clearly reversals, but you're going to have more trades than you're ever going to be able to handle, which means now you go to the point of not only having good trades constantly, but you can cultivate which one of those good trades are the best trades. So we would stay in the, Justin, no, you wouldn't have gotten into the option trade today. Because when we do our recommendation at night, or put out a recommendation, it would be that if this trade's positive, then we put out a recommendation. You might buy the 116s, the June monthly 116s, and you might buy the June 5th 115, 120 spread. But it would be based upon that trade executing. Let's see. I will look at Boeing. Yes, Boeing had a gap up, and then notice your doji yesterday. So what's our rule about a doji? It's going to move in the direction of how they open after a doji. Well, in this case, where they gapped up, what message was that telling us? It was telling us the 50-day moving average was not acting as resistance, and it was telling us that this level was not acting as resistance. That if you had been short, you would have covered it on this day, and now you can have the prospects of going long. How do we get the 12 major signal mouse pad? Oh. Jim, do you have a link to our products page? Boeing, no. Remember where an inverted hammer works, Steve. That's just a day. We're not anywhere near the overbought area. Now, if the stochastics were up here and that was at a top of a large trend, yes, that would become your, not your inverted hammer, that would become your shooting star. When and how do we use the 34? It's just, you can just put it on and see, just put it on there and see how often things support and resist at those levels. Okay, let me go through the biggies real quick. We were still recommending the calls, or not still recommending, we've recommended the call position because look at what's happened in Apple. There's your best friend signal, doji gap up. Where was your first target? The 50. Well, what happened when they got to the 50? They went through it, and then they came back to see if the 50 was going to act as support. This is a bullish signal. It's called a bullish flutter kicker signal. Paramal, yeah, hold on to your individual ones until I tell Jim to do the double line, and then you put in the ones you want to see. When candlesticks move out of Bollinger Bands, then stock is bought and oversold. Could be. That's what you're using the Bollinger Bands to do. Mine is the further away you move from the T-line, the higher the probability it comes back to test it. But you can see the J-hook pattern. Wave 1, wave 2, wave 3. Now what are we looking at? A J-hook pattern. Wave 1, wave 2, and notice what they couldn't do right here. They couldn't close it below the T-line. So wave 3 is in progress. Now what are we watching? We're watching to see if they can get through this level. If they get through this level, it tells us wave 1, wave 2, wave 3 is in progress. Amazon, we can see is in a fry pan bottom, but look what happened at the top of the fry pan bottom type pattern. We got a bearish engulfing signal. That immediately tells us they didn't break out of the fry pan bottom. You'd be a little bit careful here. If this closes back below the T-line, you close out Amazon because it didn't break out. It's probably still at least stuck in a sideways mode. Now we had Boeing, which broke out through the 50 after this slow drifting downtrend. Then you had a strong reversal signal. Tesla is having a problem getting out through this area. So you stay long because of one factor. Yeah, it's kind of got a wedge formation, and you've got the T-line, but it hasn't been able to close below the T-line. So there's a very, very simple statistic. If you don't close below the T-line, you have to assume you're still in an uptrend. So now, what would you be watching on Tesla to see if they can break out through this level, which would start probably another wave to the upside? Netflix, uptrend until when? Until you see a candlestick sell signal and a close back below the T-line. And where did this all occur? Right about in the same level it topped out before. Now here's that signal. There's kind of a shooting star, bearish engulfing signal. So when you got up here in the overbought condition, you had the doji, indecision. You had a shooting star, which is one of the 12 major signals, followed by a bearish engulfing signal, stochastics in the overbought rolling over. What are your probabilities? You set your stop just below the T-line because if it comes down through there, they're selling it off. So everything that we visualize on candlestick analysis is just common sense put into a graphic depiction. Oh. You can't see the wedge on here. There's the top of your wedge. There's kind of the bottom of your wedge. You can see it all coming to a point. The MACD is a lagging indicator. Your stochastics are more current, but there's some charts that will allow me to put stochastics and the MACD. I don't use the MACD other than it acts like a additional little fluff confirmation. Okay, John, don't worry. I'm known for talking a lot. And NVIDIA came out with their earnings this evening. Now look what this did. Here's the common sense aspect of candlestick analysis. The Japanese simply tell us where do most people buy. They buy exuberantly at the top. How do we see exuberance at the top? Usually the candles start getting big or they start gapping it up in the overbought condition. If they're gapping up in the overbought condition, what do you start looking for? Reversal signals. So you've had doji, indecision, doji shooting star, doji. Now you've got the bearish left-right combo, which is a doji followed by a bearish engulfing signal. And then they reported earnings are trading only down a little bit. But where would you think the next likely target's going to be? Probably back down to the T-line. So if you're trading this and you see it open lower tomorrow, you close it out and see whether it's going to hold at the T-line. But this all up here was telling you after they gapped it up, that exuberance, that's when you start looking for your sell signals. Yeah, it was trading down just a wee little bit. So the earnings couldn't have been too terrible this evening. Okay, so here's where you can identify breakouts using the information built into the candlestick signal before you got there. There's your doji best friend. Now these are the type of things that everybody's kind of picking up because they're all looking for the same thing in our chat room every day. But when somebody saw this break out, what would that tell us about the investor sentiment here? You can see the fry pan bottom, then there's your best friend signal. But what else did it tell you? Man, there's something big happening other than what's been happening here. That's where you start finding these big price moves. The stochastics I use slow, but it doesn't really matter because they're not going to be all that different. All we're using stochastics for is that we're looking for buy signals. This isn't a good chart to do it. Let me go to the next one. Is that a J hook? Not really. That's just kind of your fry pan bottom best friend. Notice your doji gap up. That's one scanning process that if you scan for the biggest percent price moves of all stocks, that's where you're going to start finding these breakouts. If you see a buy signal or pattern above the T line in an oversold condition but sitting close to resistance level, like a major moving average or previous level, should we wait to cross the resistance level first? Depends. Let me, Ashish, let me look at some charts and I'll try to answer that as we go along. See our buy signal? There's our best friend signal that started this uptrend. There's our left-right combo that started the next uptrend. There's kind of our doji sandwich that's breaking this level, might be starting our next uptrend. Now notice where this major breakout occurred. Came up, hit the resistance level, but notice the one thing that it didn't do. When they backed off, they couldn't close it below the T-line. You could, if you took profits here, which is the right place to do it, because if they came up through a resistance level, and the next day they opened lower and started trading down, what was it telling us? They weren't going through the resistance level. If you had bought down here and you'd sold right here, what's the worst case scenario? The next day, if it started trading above the T-line, you could, or the 50, you could be buying it. So you're basically watching what's happening in investor sentiment at the breakout levels. If NVIDIA stays above the T-line, can we hold since at the moment it may be supporting? You can. So that's why you want to watch based upon now. Remember, what it's doing right now after hours doesn't mean a hill of beans. If it's trading 6 million shares a day or whatever it does, it might be moving around on 20,000 shares after hours. What you want to see is where they're going to open it. If they're opening it lower, you might get ready to take profits. If you want to hold it until it comes back down and test the T-line, you can. But if you see it selling off, you can pretty much assume that if it opens lower, it's coming down to test the T-line. So you close it out on a lower open. What's the worst case scenario? Comes down, hits the T-line, and then comes back up through with the open. What's that telling us? They supported on the T-line, and now they're buying it again. You buy right back in again. You can use CB. You can use either one. Remember, we're using the stochastics to tell us that we're buying buy signals in the oversold area. let me get to we're on a fry pan bottom. The stochastics are different. We're usually buying a fry pan bottom breakout when your stochastics are in the overbought condition. I can't get, the T-line is merely the 8 exponential moving average. And if you put it on your chart with candlesticks, it gives you an extremely high probability that as long as you're staying above the T-line, you're still in an uptrend. Now, what do we expect coming out of a fry pan bottom? A very strong price move. When that price move starts, a lot of people say, well, man, I've got a profit. I better take a profit so it doesn't go back to a loss. The T-line eliminates that. You just stay long as it stays above the T-line. Let's see. We knew we saw that the weed stocks are starting. Look at your fry pan bottom here in TLRY. It broke out. You can pretty much see that's a breakout level. So what do you want to do? You can be buying this one on positive trading tomorrow. That's what the whole factor of seeing what a pattern breakout is telling you. Kind of a fry pan bottom, and look where it is. Right up here at the breakout levels through the 200. If this opens positive, this is what we call a bobble breakout. It came up, it failed right here at the 200. Pulled back. There's your inverted hammer. We have the inverted hammer is one of your 12 major signals. How to identify a 5-point bottom? I wouldn't know a 5-point bottom if I sat on it. I don't know what a 5-point bottom is. There's your inverted hammer. We have a simple rule of a inverted hammer. If it opens positive, you've got a 95% probability or greater that it's going to trade positive. So that's kind of confirming this little fry pan bottom. It's come back up through the 200. It's right here at a breakout level where it failed. If it opens positive, you've got an extremely high probability you're now in wave 3. Whoops, PBFX. Fry pan bottom. Look where the breakout level is. And then look at the additional confirmation. Notice they couldn't close this below the T-line. If this opens positive, what are your targets? There's the first target right here that it will fill. There's your second target, which is getting pretty close to your 200-day moving average. So why is it so important to use or identify the patterns? Because if you're in a slow uptrending market, a lot of stocks are going to have a nice slow uptrend. But if you can identify the patterns, and we know the expectation of those patterns, that's going to produce much stronger price moves during an uptrending market. So if you're trying to or if all boats rise in a rising tide, we're trying to find the boats that are going to rise up a lot faster than the rest of them. Are you able to show 60, 15, 2-minute charts so we can see the T-line? Yes. Let me do this. What was the big mover that we just looked at? Surf? When would you buy this one? Here, 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 here. Which way is it moving? Well, you can go over here. I usually use the 10-minute chart as my bellwether. So look what was happening on your 10-minute chart. Gapped up, held the T-line, came up, held the T-line. I could be buying right here because it hasn't closed below the T-line. I could be buying right here. I wouldn't buy here, wouldn't buy here. But I could start buying again here, here, here. And then look at the patterns that you had. There's a J-hook pattern setting up. So if it got up here and it did this, I might be taking profits here. Now that's on your 10-minute chart. You could be trading this off your 5-minute chart. Or if you really wanted to trade quickly, the 1-minute chart. Now, you can trade the 1-minute, 5-minute, 10-minute combination. But if my 1 minute is starting to tell me they're starting to sell, that means it might be telling me my 10 or my 5-minute is starting to sell. And if my 5-minute is starting to sell off, I might start watching for a sell signal on the 10-minute chart. So if I'm taking profits here, why would I be more apt to take profits here? Because look what was happening on my daily chart. Remember our simple rule. The further you move away from the T-line, the higher the probability they're going to come back and test it. So the further you move from the T-line, the much quicker you can take profits, because if you already know you're too far away from the T-line, watch your 10-minute chart. When they start coming back down through there, that's when you can take profits a lot quicker. I think you missed my question. How do you find stocks that are about to break out ahead of time? That's what we're getting to right now. That's why we're working on this. This one would have told us that with that bobble breakout, if it opened positive, we could be buying on positive trading. That would have a strong chart move based upon the pattern we recognize as it comes right up to a resistance level, the 50, and then look at our little hammered doji, and they gap it up through the 50, we're buying immediately. Yes, you also have a T-line crunch on that one. So essentially what we're looking at are patterns. This is what we call a slow curve. This is what we call your J-hook pattern breakout. This is what we call your best friend, doji gap up. And we know what's going to happen, or have a pretty good idea what will happen here. You don't need to scan for a bobble breakout. You're going to find those on your charts, or you're going to find those by, I didn't even finish what this was. There's your 45 degree. How long on this big move? What happens to what do most people think? Boy, I don't want to chase after this one because, yeah, it's way up. I'm not going to chase it. Well, if we know that's your best friend, we know this is the type of result you're going to have. So a lot of these charts, you don't even have to scan for it because you're going to identify it. Let me show how to identify it. We don't have to scan for this. If we had a strong price move and a failure, and then it's still on our watch list, we can see what's happening. It's building up. Or if we did a scan today on stocks that had the biggest percent price move, this probably would have shown up on it because it was probably up about 8% today. Oh, you don't have to, yeah, on any of your chart settings, this one right now is at the daily. I can come over here off the screen and I can hit the 10-minute chart. And you can see what the 10-minute chart looks like. You can see the patterns are just the same. There's your fry pan bottom. Where did this start breaking out? Right here at where this pattern broke out. How long did you stay in this one? Until you saw a sell signal and a close below the T-line. However, on your 10-minute chart, if you're getting to the point where you're at the end of the day and it's just now coming back a little bit, what's that doing to your daily chart? It's telling you your daily chart is still trading up here at the top end of the range, which is confirming that pattern. Yes, there's packages. All our signals are, the candlestick signals, our formulas are already over on Thinkorswim, and then you can buy a package that shows you the high profit patterns, like the best friend, left-right combo. Oh, I think there's about 8 or 12 of them. And all you do is when you buy the package, you click on a button and it automatically downloads downloads it to your Thinkorswim program. I'm going very slowly here. You guys are going to be here for a while. Tell the kids to put themselves to bed. Mplex. There's your fry pan bottom. There's your fry pan bottom. What do we expect from this one? Probably coming up here to the 200-day moving average. So when we look for best friend breakouts, it's very simple. We're scanning for the biggest. Oh, didn't want that. You can see here's your best friend breakout. Remember what happens then? We expect a 45 degree, this type of price move. So this breakout right here tells us we're in the next wave to the upside. OMP, one of the oil stocks. Notice your best friend breakout. Let's get rid of all these. Look at your best friend breakout. Look what the result was. So we know what to expect. What's a best friend breakout? You're looking at it right here, Paul. A doji followed by a gap up, especially down closer to the oversold area. Look at your little doji right here. That gap up the next day is telling you there's been not only a change of investor sentiment, but a very strong change of investor sentiment. You could still be buying this one with the expectation. Now look where it traded today. Came up and filled this gap. That would have been your first target. So now, if you're long, or if you're thinking of going long, you're getting up toward the overbought area. So this would probably be, let's just say this, I probably wouldn't buy here because there's too many other good places to be looking at. Is this something of the same nature? Well, again, kind of your best friend, continuing this uptrend. There's your little doji gap up, telling you that the bulls are there. The 45 degree just looks like a 45 degree. Now I forget which one we were looking at. Was it BJ? No. Darn. I forget which one. Was it OPM? OMP? Yeah, but there was another one that I just looked at that had a much better illustration of a 45 degree. So 45 degree is just after a big move like this, it's usually a steady move like this. And you can stay long as it stays above the T-line. There was a best friend. Well, Shazam. Here's another one that has a fry pan bottom. There was your fry pan bottom. There was your breakout. Right about there. And this is very simple. All you do is stay long on this. If this is wave 1, wave 3 should be approximately the same magnitude. And how long do you stay long on this one? As long as it doesn't close back below the T-line. So here's a 45 degree, yes, on this fly. Big move, your breakout. That tells you the dramatic change of investor sentiment. There's your 45 degree. 45 degree could be like this or like this, but it's just kind of a steady uptrend, and you stay long as it doesn't close below the T-line. How do you count waves? It's very simple. Which one were we looking at that Apple had a very simple one? This is wave 1. This is wave 2, the pullback. This is starting wave 3 of a J-hook. A J-hook pattern is a strong price move, a pullback, and then a J-hook wave 3. So I count this as wave 3, which is going to be approximately the same magnitude as wave 1. Now you got sell signals, so you take your profits, but then you see it holds at the T-line and starts back up. Now what's my count? This is wave 1. This is wave 2. If it breaks out through this level, now we've got wave 3 going. Now, why is it important to see it break out through this level? Because if it fails here, look at our little doji, or this is called a bearish harami. In Western terminology, it's called an inside day. It opened here, closed here, had a green candle. Let me make this even bigger. There we go. Then it opened below where it closed the night before and closed above where it opened. So this body was inside this body. That's a bearish harami. That's telling you the buying has stopped. So, and it did it right here at this level. So if it opened lower, telling us it's confirming that signal, what do we now have as far as a wave? We don't have a J-hook wave 1, wave 2, wave 3. We pretty much concluded we've got a double top. We want to be out of that position. Everything that you look at in candlestick analysis is just pure common sense put into a graphic depiction. Wave 1, wave 2, there's your J-hook, wave 3. Now I'm using this one because there's your breakout illustration. If you can see that next wave setting up and you see a doji sitting right smack dab on the 200-day moving average, what's our doji rule? It's going to move in the direction of how they open after a doji. If it opens positive, what can we conclude? 1, that it's going to trade positive. 2, that's probably going to be a doji sandwich, which means this candle right here is going to be probably at least the same magnitude as this candle right here. 3, what's it telling us about our pattern? There's a J-hook pattern starting. You've got a high probability that this isn't an uptrend. Once it goes into your uptrend, now what becomes your trend analysis? You stay long until you see a sell signal and a close below the T-line, with the caveat that if this all of a sudden started shooting way up here, that far away from the T-line, in the overbought area, we go back to the very basic of what Japanese race traders tell us. Where do most people buy? They buy exuberantly at the top. You'll get the recording, Mariano. Okay, so these are the type of things that we point out in the kind of the on our picks and or in the chat rooms. So this is what we call the classic. The classic is, there's your fry pan bottom. Look at your doji right here. If it opens positive, which way is it going? It's going positive. Kind of your double doji setup. Traded positive, what did it tell us? It's telling us our fry pan bottom is breaking out. It's telling the 50-day moving average is not acting as resistance. What do we expect coming out of a fry pan bottom? A very strong price move. There's our doji in the overbought condition. There's our shooting star. If we're starting to take profits, what's happening right here? Notice they never were able to close this below the T-line. So now what do we have? The classic, which is a fry pan bottom creates a very strong price move. The prerequisite for a very strong, or for a J-hook pattern, is a strong price move with profit taking. Now what can we conclude? That if this is wave 1, wave 3 is starting. Sean, that could be. We'll get to that in a little bit. Too many jargons. There, Neil or Niall, yes, there's a lot of information. But we just went through a 2-day training this past weekend. And our conclusion or our analysis was, if you learn the 12 major signals, those are the bricks and mortar, the bread and butters, your ABCs. That's what you want to learn. If you understand how or what a signal looks like and what's confirming it, and you understand the psychology, which the Japanese race traders have explained to us, you've got a grasp on price moves as somebody that has been trading in the market for 50 years. It's all common sense put into graphics. prices do not move based upon fundamentals. Prices move based upon the perception of fundamentals. And that's what candlesticks are. They're the graphic depiction of everybody making their decisions. So it's a lot easier than you think. Learn the candlestick signals, you learn the 6 or 8 patterns, you've got a good grasp. Then, if you want to go even a step further and you want to learn the high profit signals and patterns, which there's about 12 or 14, which are a combination of the signals and patterns, you don't try to learn all 12. You learn 4 and become very good at it. Because even with 4 candlestick signals, whether it's the best friend, the left-right combo, the kicker signal, and the fry pan bottom breakout, you will have more trades than you'll ever be able to handle. That's right. Yeah, so I've written 3 books. Can't even remember the names of them. Yeah, that's got, each book is, the first book, which was published by Wiley & Sons, gives you kind of the basic background. But if you really want to learn it better, you get the High Profit Candlestick Patterns, book number 2. And then you can go back and get book number 1 to kind of fill in all the logic that creates the signals and patterns. Then the third book was, a lot of people have a hard time, even if they've got the best trading method in the world. If you can't control your emotions, you're not going to make any money. So candlestick signals, because of the high probability results, it kind of builds in your self-discipline so that you're now trading based upon what the charts are telling you, not what your emotions are telling you. John, you don't usually use a scanner to find the crunch. I guess you could. Jim, is it in our little file in our chat room? Oh yeah, I've got 3 cuckoo clocks in here, and they all miss. Okay, Junior. Let's keep going on this. We're not even halfway through. Oh, here's our bobble breakout. Notice how it failed up here. There's your evening star signal. There's your bullish signal. Came back up through. We started buying this one because they broke out. This is a bobble breakout, meaning we could see where the failure was, and then we could see them coming back up through that level. Dang, who writes this stuff? Oh, that's PS. We bought this one. Notice how you had your bobble breakout right here. When it came through here, where do you think your next target was? The 200. Failed at the 200 with a dark cloud. Look at your morning star signal, another one of your 12 major signals. And it came back up through. So if I took profits here, I'm buying back here because I know we're back in an uptrend. It's just putting it tells me when to get out, it tells me when to get back in. I don't have qualms about taking profits here and buying back here, even though it's much higher than where I took profits, because at this point, if you cut off the chart, we didn't know whether they were coming back here or here, but once we saw this, we knew they were heading back up for more upside. The bobble is an expanded flat pattern? No, the bobble is a J-hook pattern with a much more defined place where they end at wave 1 and they start wave 3. Notice when it failed here at the 50, where did it come back to? The T-line. What happened to the T-line? They couldn't close it below the T-line. They came back up through the resistance. That told us we were in, if you took out the 50, that would basically be a J-hook pattern. Same scenario right here. Failed at the 200, pulled back to the T-line. There's your morning star signal, which is one of your 12 major signals. Then when they came back up through this level, if you took out the 200, you basically have a J-hook pattern. It's just much more defined. Do you buy the bobble breakout even if there's no candlestick signal? Yes. As long as it doesn't close below the T-line and you see it come back up and you're doing a J-hook pattern, you can buy back in. Looks like they're going to honor, okay. So that should mean you're probably getting some positive trading on the futures. Okay, so here is the buy. There's the breakout level. That's an extremely high probability buy situation. Let's see. We did DK and G. There was your bobble breakout coming out of a fry pan bottom. There was your J-hook pattern, never closed below the T-line. But you can see it more defined right here. How long do you stay in this? As long as it stays above the T-line. What this does is eliminates that common flaw that most of us have. Back before candlesticks came along, I was a stockbroker for 8 years, and I was the worst investor in the world. Where are the futures right now? One time they were up about 100. So if I had a profit, which I very rarely did, what was my biggest fear? Of having my profit turn back into a loss. So what would I do? I would take profits way too early, kind of eliminating that, let your profits run, cut your losses short. That's the nice thing about candlesticks, is it tells you when to buy, and with common sense it tells you when to sell. Michael, we do have that one package for Thinkorswim. I'm not familiar with MT4. Yeah, so there is a package you can buy. If you want to email Abraham at Candlestick Forum, he can give you the link to that package. Here, did we do this? Yes, we did this. This was the Cradle pattern. High probability that when this broke out, where is our next expectation? Probably at least coming back up into the trend. So what this really does for us is shows us exactly when it's time to buy. I'll be ready to buy this one tomorrow on positive trading, especially if it comes up through the 34, because that tells me the Cradle pattern should have that slingshot effect to the upside. After you initiate a new position, no. If I'm buying a position, which is an equal dollar amount, if I've got a $500,000 account and I decide I'm going to put on 10 positions, each position is $50,000. And I'll keep that $50,000 position on until it's time to sell. That way it keeps my emotions out of my trades. Does a bobble breakout need confirmation after the first? Yeah. If you see something, which one was it? Now I didn't buy this one until this day because it opened and immediately started trading positive. But you don't want to see it open down here because that tells you they didn't break out. TN, that's a different package. Okay, thank you, Jim. Good night, Fred. Sorry to keep you up so late. We also have the scoop pattern. Oh, and this is in the wrong place, apparently. But you can see how you had the T-line crunch bring this up through. There must have been a scoop pattern on here somewhere. I don't know what happened there. there's kind of a little scoop pattern. Look at your doji gap up through the resistance level. There's your 45 degree. But the fact that you had a strong buy signal, look at your kind of your flat handle, not a real flat handle. There's better illustrations, I think. This GRY is a better illustration. Once again, kind of a flat handle. There's your little scoop. There's your breakout. Tells you you're probably in wave 3, the same magnitude as wave 1. So everything we're looking at, again, I want to stress, a scoop has a flat handle, then there's your little scoop. And that scoop usually has a slingshot effect that shoots to the next big price move. I think we've got stuff on TradeStation. I'll have to, or we'll have to check with Abraham to see whether they ever got that on there. So you can see kind of the little flat handle and then that scoop. Oh, wee little scoop here, but you can see what happened when they gapped up through this level. There was your breakout move. I'm trying to find one that shows better illustration. There's your flat handle. Notice where they pulled back, right smack dab on the 50. This is the advantage we have with the visuals of candlesticks. We could see exactly what was happening right here. Indecision, indecision, then their new decision. Where do you think our next likely target is going to be on the scoop breakout? If this is wave 1, they're going to take this up to the 200-day moving average. Oh, I think that was even more clear here on this. There's your scoop pattern. Look at the flat handle, then your left-right combo, and bam, there's your scoop pattern. Now what's happened? Now you got your J-hook pattern. Where could you be buying this one, even though you're up in the overbought area? If it starts trading positive, what's it telling you? Wave 1, wave 2, and notice where wave 2 came back. In this case, it came right back to the T line and the 200. Pretty much told you wave 3 is going to be the same as wave 1. So you know exactly where the breakout price move is based upon a positive trading. Okay, let me, don't want to keep everybody here all night long. Another little scoop type pattern, but notice the gap up, notice your doji sandwich. Where's your next likely target? Up here. There's a gap right here, getting you pretty close to that level. Now, what you should be noticing is that there's a lot of stocks that are getting pretty close to where they were trading before the big sell-off. Scoop pattern. Look at that little flat handle. Then there's your scoop. Where was the first likely target? Up here to the to that level. We bought Marvel today because when it broke out, look how it broke out. This is what the kicker signal is, your strongest reversal signal in candlestick analysis. A trend kicker illustrates there's going to be a lot more upside. So you can see where our trend kicker occurred. Look how it opened here and closed here. Then yesterday it gapped up, and where did it move? It broke out through this level. What's that telling us? Wave 1 and wave 3 is going to be about the same. I don't know that. TN, do I get a discount for toss because I got your package? No, I don't know the answer to that. Oh, for Metastock? I know, they're two different companies. Some people use Metastock for their scanning. Some people use toss for their scanning. Where does wave 3 start? Just anywhere in here. We're not trying to be exact. We're just trying to say if that's wave 1, wave 3 is going to be approximately the same. But what's the final criteria? The final criteria is if it gets up here, we start looking for sell signals. 5 days ago, not necessarily, but you could count this as the start of wave one. But I'm just approximating that if this is wave one, this move from right in here somewhere is going to be approximately the same. In your example above, there is a red candle that closes below the T-line. Guess you're looking at the green candle below the T-line and stay in the trade. Over here, no, there was your left-right combo. There was your selling. You were out of this trade. Now you're looking to come back in. Notice what they did. Another bullish engulfing signal off the 34, hit the 200, and then gapped up. Where was your buy? Right here they failed, but the next day when they gapped up and started trading this way, that was your trend kicker signal. Meaning they opened it here, closed here, and then they gapped it up again and went this direction. Notice how that was a little kicker signal, but it was already in the trend. That's telling you there's going to be more upside. Let me try to get through some of these real quick. Blue, you can see the breakout level right there. This one probably has more upside. Arna, look at the breakout level with kind of a hammer gap up. Wave one, wave two, kind of a little scoop type move. Wave three in progress. Yeti. Just now came up off your morning star signal off the 34. They gapped up. Now they're through this level. If they open this positive, what can we assume? Wave one, wave two, wave three. And RTX. This is a breakout. Failed at the 50, pulled back. There's your best friend. Now if they start trading positive, where do you think your first target is likely to be? This trend right here, and then possibly up to the 200. So anytime you see an area, and I say see an area, that we can visually see there's buy signals at breakout levels that everybody else is watching, we are moving a little bit faster. Wave two, yeah, is just the pullback wave. We're just able to see very much more quickly where the breakout is. Again, look at your bobble breakout. You could be buying this one because now we can at least assume wave one, wave three is going to bring you back up here. CVTI, there's a scoop pattern. So this is where we call this convergence analysis, or 2 plus 2. Flat handle, pullback, there's your left-right combo, there's your gap up. Now you broke out through the handle in the 50. Where do you think your next target is going to be slung to? Up here to the 200. So these are patterns that work time after time. Another one that's just now broken through the 50, kind of on a fry pan bottom. This one you buy on positive trade. That's guess. I'm going through these fairly quick because we got... So this is what we're kind of really alluding to, that if you can see where the resistance level is, and you can see the buy signal, a bullish harami, a bounce off the 50, they broke through this level, wave one, wave two, now going into wave three. Broke through, DBI. GMED. There's your breakout, your bobble breakout. There's your double doji breakout. There's your doji sandwich off the 50. Where's your next likely target? You just stay long until you see a sell signal. No, you're not that far away. That's not far away from the T line. Now that is far away from the T line. That's just, tomorrow when they open this up, your T line is going to be up here. Where would you put your stop loss? Below the T line. So if this opened up positive tomorrow and the T line was up here, you put it just below the T line. Now remember, this is telling us the probabilities are pretty strong that we're now going into another wave to the upside. So your stop loss is at a level that it shouldn't be trading back to if that conclusion is going with the probabilities. All right, just a couple more L brands. You can see how this gapped up through kind of the 50. There's your next target. NK. J-hook type pattern. Wave 1, wave 2. Look at your little morning star signal, breakout, wave 3. And the lead stocks are all breaking out. There's Chrome. There's CGC. Notice your little scoop type pattern off the 50. There's your target. And MJ, which I guess is kind of the ETF. There's your little mornings or scoop type pattern slingshot effect. And Under Armour, look what happened today. Big bullish engulfing signal. Where? Right about the same level it bottomed out before. So if you're buying this one, all you do is watch to see what happens when it gets to the 50. If it breaks through there, it's coming back up to the top of the trend. Okay, let's call it a night there. Went through a lot of stocks. They work just as effectively on the downside. There's your bearish best friends. Bearish engulfing signal. Bearish best friend. Where do you think your next likely target is? Probably back here to the 50. Julie, I trade both. I've got option account and I've got a couple stock accounts. How was that in engulfing? Yesterday was a positive. It still engulfed it again. Just the fact that, yeah, it's still kind of a big engulfing signal. Okay, everybody that has just put in their stock, put it in again, because I'm going to tell Jim to go ahead and do the double line and put in your requests there. So if you've put them in, do it again. And in 3.8 seconds, Jim, do another double line, because I won't be able to scroll up fast enough to beat everybody. So they're going fast. AMD would not be long or short. Notice how it's having a hard time, and it did a bearish left-right combo today. I'd probably be trading something else. Microsoft. Another one. It's not a real good trader because it's such a big institutional trader. If you're long, you can stay long, but if this opens lower tomorrow, you close out the position. Oops, man, I got to scroll way up. Okay. Clovis, you're out of this one. Look at your bearish left-right combo and close below the T line. That's where you would have closed this out because I told you they weren't going up. Now you can get ready to buy, but you can see it's supported here, but I wouldn't be buying this one until it came back up above the T line. ENPH closed right about there at the T line, which means it has to open positive tomorrow. Remember what happens with a doji. If it opens lower, you close it out because it's going to move in the direction how they open it after a doji. American Airlines is not one of your strongest ones. I wouldn't be long or short American, but I would be more inclined to be long on AZUL or even southwest, because notice your bullish Harami gap up, probably at least coming back up to test the 50. American is probably the weakest of the airlines right now. AMAT, I would suspect the normal. What happens is when they go through a resistance level, they'll come back and test it to see if it's going to act as support. Now, you'll be able to see whether it acts as support if you see kind of another buy signal in here, whether it's a doji or a hammer. But if they support here, you want to buy immediately, because everybody that was watching to see that it was a resistance level, when they see it's acting as support, they start coming in aggressively. Cena, yes, a bearish Harami right here at the T-line. So that kind of negated this little trend kicker, which means you don't have a very good chart. If you were long and you stayed in it, it has to open positive and trade positive. If it opens lower, close it out right away. M-chip, look how it failed at the 200, and notice where it traded today. Traded back below the open of the previous day's candle after failing up here. That's where you should have stopped out. Right now, I wouldn't be long or short this one. Oh, potential T-line crunch? Yeah, but it's going to take a lot of strength or a lot of buying to keep it up above the T-line. Right now, it's just not a very good-looking chart at all, which means there's too many other out there to wait for that one. Tractor Supply, there was your T-line crunch. There was your J-hook pattern. You stay long on this as long as it stays above the T-line. Uh-oh, somebody's still adding, because I've got to scroll back up. Home Depot. Whoops. Home Depot just barely stayed above the T-line. You stay long. Lowe's stayed up. You stay long. And this is why we own Nail, because this is triple leveraged. There's a gap right here that it could potentially get to. So it could still go from the 23 range up to about the 40 or the 39 range pretty quick. So we bought options on that one. Overstock. Another one, you stay long as this stays above the T-line. You've got another J-hook patterns. You don't want to see it close back below the T-line. Kimberly-Clark, nothing of any great magnitude. You're sideways. Nothing here to really get excited about, which means I'd be someplace else. AYX, there's your J-hook pattern. If you see a J-hook pattern right at a kind of a breakout area, what's that telling you? The J-hook is probably going right up through that resistance level. They're going to break out through that area. Cough, nothing. I'd be someplace else. That's a sideways chart. Verizon, stay short. Ever since your failure right here at the 50 and the gap down through the T-line, I may have covered it here, but then you could have re-shorted it here. Right now, if you're short, you stay short. Crude oil is now back up to the, trading up higher after hours. Holy smokes. So we can look at it right here. Crude oil, 33.80. That doesn't make sense. Oh, I guess USO. Well, you can see USO, I would suspect there's a wee little teeny gap right there. And then if they brought it up to the 50, that means that crude oil prices would be getting closer to the $40 range on the actual price. The SPY, slow uptrend. You're still above the T-line, but you're moving very slowly, which is all the markets right now. I would stay long until you see a sell signal. That's what we put out every in the newsletter every Thursday or every Monday and Thursday. Harp, there was your fry pan bottom breakout. And where did it break out? Right here. Look at your doji sandwich that broke out right about where the pattern actually started. This is what you look for on a fry pan bottom, is the breakout. That's where the enthusiasm comes in. Now, where would you have taken profits today? Look how far you were from the T-line. If you had flipped to your 10-minute chart, what happened up here when you were that far away from your 10-minute T-line? Well, there was your shooting star. You would have started taking profits right here, expecting coming back to the T-line. So remember, the candlestick signals are the graphic depiction of everybody buying and selling during a specific time frame. So they work on all time frames. Clovis, nothing. CVS, nothing. I wouldn't be long or short. That's a sideways chart. So when I say it's a sideways chart, if that's not your best looking chart, close it out, because the benefit we have with scanning for signals and patterns is you're always going to have more strong signals and patterns than you're going to be able to handle. So why sit in something that doesn't have any direction to it? Hewlett-Packard, you're right here at the kind of the breakout level. Be ready to buy this one. Notice your best friend gap up. Notice your doji sandwich. You can be buying this one on positive trading. XLK. Little bearish signal here. Trying to see if it's at a level. You stay long. You're probably going to see some consolidation, but as long as it stays above the T-line, you stay with it. Newmont. Whoops, that one you should have been out of. Look at your gap up. Remember where the most people buy? They buy exuberantly at the top. So when they gapped up and then did a bearish left-right combo, that told you it was time to get out. Then you did a shooting star. Then a shooting star and close on the T-line. If that kept you in, even seeing all these sell signals and the stochastics rolling over, it had to open positive today to stay in it. When it opened lower, you should have closed it out. Now you can even consider going short. Ego, another one that you would have, with that little dark cloud and it closed below the T-line. What direction is this one going? Sideways. Move your money someplace else. We did American EYZ, the Brazil fund. You can be buying this one. Just be aware there's a resistance level right here. He did get up through the 34. You still have more room in the stochastics. You can stay long. Doji above gap. Yeah, but you notice you're still sitting right here on the T-line. You're not seeing any strength. Look what happened right after your gap up. You did a bearish harami, which told you the buying had stopped. I would be someplace else. That's just not a strong chart. Even though you had the gap up. Oh man, where are all these lines coming from? Get rid of them. This one looks like a big fry pan bottom. Crude oil. Oh, okay. All right, so that's another index. You can see that it's moving positive. CWH, we did this one already. Right now, there's only one thing you can do, is if you're long, you stay long. And you're in the overbought area. Where's the logical place that this should not be trading? You put your sell stop just below today's open. Because logic says if you're up here, you've moved a little bit away from the T-line, you're in the overbought area. If they can't have enough selling strength to come back down through that level, they're taking profits. Get out of the, take your profits and go. Goose, nothing great. Now you do have a gap up. You can buy it on strength, which means you'd break through this level, but you need to see some more strength on this one. Haynes Brands, another one that's in a nice steady uptrend. You're back into the trend channel, so you have to watch to see what happens once it gets to this level. Whoops. The Qs, again, sold off, but you're still in a slow uptrend. Cisco, look at the failure right here at the 200. If this opens lower tomorrow, you close it out. Then you watch to see if it stays above the T-line. If it stays above the T-line, you get ready to buy it back if it comes back up through the 200. But your probabilities are now lackluster as long as it stays below the resistance level. Alta, you can be buying this one also with the expectation it's coming back up to the top of the channel, which coincides with the 200. And Guild, you stay short if you're short. I know a lot of people were watching this, but it's just a nothing chart. So, and now it appears like if other people are coming up with the vaccines a lot quicker than them, Guild is, you stay short. Codex, nothing. Here's a perfect example of the further away you move from the T-line, the higher the probability it's going to come back and test it. So when it got up here, remember, it just came from the $10 range to the $30 range. That's where you flip to your 10-minute chart. If you don't use your 10-minute chart and it opened here, that means it gapped up. And what do the Japanese rice traders tell you? Start looking for selling when they gap it up in the overbought area. Trades up here, where's the logical place to put your stop? At where it opened. Because if it comes down through there in the overbought condition, that far away from the T-line, it's profit taking. You want to be out of the trade. It's probably going to create some sort of sell signal. Here's another one where I probably would have stopped out with it trading back below the low of this candle, that far away from the T-line in the overbought area. If I was going to buy it back, it would be above today's open. And NVAX also had kind of selling. There's kind of your bearish doji sandwich. Down day, a doji type day, it opens lower. Where do you think they're likely taking it to? Coming back to test the T-line. Pause. Another one. Look where it opened today. Make this bigger. If you're in the overbought condition and you're getting lots of strength, if they open it below the previous day's open, close it out. Because that means the sellers are pretty strong. So if you got in down here, take your profits. They shouldn't be opening it below the previous day's open. And here is a perfect example of when they started selling, where did they bring it back to? Right to the T-line. Now this is why you use the T-line, because look where they bounced this one a few times. Now why is that relevant? Because nobody has the T-line on their chart. So when it's bouncing off of that level, it's not because everybody has the T-line and they're watching to see what happens there. Nobody has the T-line on their chart. It's hitting a natural support level, which we use, or we can have identified as the T-line being that natural support and resistance level. McDonald's, you can stay long also with the expectation that comes to the top of the channel heading for the 200. We did Hewlett Packard, we did AMD, we did CWH, AXLA. That one you can buy. Doji Harami. Anytime you see a signal or a pattern that has a doji involved, it's going to be a little bit more relevant. Doji, inverted hammer, doji, gap up. You can be buying this one. That's a good looking chart. Oh, something has happened very bad here. Very bad. For some reason, that one's not coming up. Let me make sure I type that one in correctly. Yep, something's wrong there. CLF. You're right here at the resistance level. You can be buying this one. If I was long, I'd stay long, but I'd watch to see what happens here. If this opens lower tomorrow, I'd close it out because that told you this level did act as resistance. That's what the doji told you. The indecision. Another one, right near a breakout level. You can buy this one on positive trading. We did Apple, let's see, HPE. Yeah, also right here at the breakout level. Best friend gap up, doji sandwich. You can still be buying this one. EELX. Oh, Herald. There's nothing there. And from what it looks like, are we looking at an 18-cent stock? That looks like it has very little volume. Wouldn't even be paying attention to this. We did ENPH. This one has to open positive to maintain the uptrend. Jets needs to open positive also to get up through the moving averages. Again, your best friend gap up. eBay needs to stay above the T-line. AEM. You can go short. Bearish engulfing, close below the T-line. At least look for the first target and second target. SDC, you can get ready to buy this back. There's your bullish engulfing in the oversold area, supporting off the 34, closing back up above the T-line. The cruise stocks are starting to come back up. And so a lot of people say, why the heck would this cruise stocks be moving up? We don't know why. We don't have to know why. All we can see is that they are moving up, and it's got a good buy signal, especially if it starts trading positive. AMAT. Yes, so if it came back down and supported here, everybody would be watching it. The 200 anyways. We would be watching the T-line also. Yeah, I wouldn't want to see it close back below this level. So the assumption was that if you stayed in this after the shooting star, the perfect place after a shooting star in the overbought condition would have been a stop right below the low. Because if it came down through there, where would you think it's moving to? Back to the T-line 200. This Dominoes, nothing. No direction. And Sage, whoops, missed a few. Sage, better make this big enough where we can see it. Sage, nothing exciting except it's starting to come up. Another doji sandwich potential that if you bought it on positive trading, that this candle right here would be the same as this candle right here, breaking this move, then you'd have to watch to see once it got up here. Lebo, stay short. Yes. Now, if you're going short, I'd use this level right here. I'd want to make sure it breaks this level, but your stochastics look like they're still heading down, and it looks like you have a dumpling top setting up. Notice your left-right combo, then the selling, so you can still be shorting this one. So we did Sage. That's what they call a tweezer top. You got to be a little bit careful. Notice how it failed right at the same level and then did a doji harami. If this one opens lower, come out of it and then see what it does at the T-line. Slumberger. Another one that is right here at the resistance level. If it starts trading up above today's open, it's breaking out. You can be buying it. Halliburton, kind of the same scenario because back over here is the gap. We'll fill the gap and then has the prospects of heading up to do or hit the 200. We're watching Apache, same scenario here. If this opens positive, it's breaking this downward trend channel. Now that's also going to be a function of crude oil. Oh, no problem. That was good to know because I would have not have caught it. Yeah, you always got to remember, though, that's information. Remember, well, some of you might be too young to remember, but remember back, it was in the 80s, that Japan was going to own America. That was, I mean, we were on the decline. So remember, there's still so many moving parts out there that one scenario isn't going to change things. Yeah, you can short AEM with the expectation of coming down into this area. CAR, this hurt, or Avis. You can stay long. You just watch to see what happens once it gets back up here to that sideways resistance level. And Clovis. Again, you shouldn't be in this one, either long or short. That's just kind of a nothing chart until they can get enough strength to get it back up above. Oh, where did I show that one? Oh, looks like a double doji for a short. You could, but remember, you got kind of a support area with the 50, this area where they broke out through the 50. Yeah, let's put it this way. I bet you there's much better places to be looking for shorts. TMUS. If you took out these little flutters, you got a bearish kicker signal. I'd probably be more apt to be shorting this one. SRNE, nothing there. But once again, look, here's the next thing you do. If you see it open up here, remember this stock went from 2 to 10. When it gapped up here and started trading off, you start selling immediately. Or, worst case scenario, you put a stop at where it closed the night before, because logic tells us if there's enough selling strength to get back down through that level, you want to be out of it. And American Express, wildly exciting on this one. If you like it, it's got a bullish engulfing, it's got a best friend gap up, it's still got the resistance level right in here. It's not a very exciting stock, but if you like it, you can be buying it. Yes, there. You can see Jim will. Yeah, we'll get the link out to everybody. We did this one. XLK, a little bit of selling. Expect it to come back and test the T-line. Did I do SRNE? Yes. Lulu. Stay long. Notice when they came back up above the T-line, another J-hook pattern. Nugget. Nugget lost energy, closing back below the T-line. There was your dark cloud, one of your 12 major signals. Another little dark cloud, now a close below the T-line. I wouldn't be long. Might be going short if it came back down through the day's low. One of the trucking companies. Not a real strong chart. I mean, it's heading up, but it's not one of your strongest charts. There wasn't really a reversal signal. Oops. Yeah, that's not a real strong chart, even though it's heading up. Nothing there on Charles Schwab. That's just sideways. Would not be long. If you've been short, you can stay short, but it probably wouldn't be long or short. Yeah, you could short this one if it came back down through, let's say, yesterday's low. Yeah, Neil, I think there was over 400 at one time. Whoops, we did that one. Whoops, I didn't scroll down. What is the green line? The little green line is the 3T line. The gray green line is the 34. The 3T line is just a, we can do a session on the moving averages one night. But they all work well. The dark green line is the 34 EMA. It works reasonably well. Well enough to have it on your chart. Let's see. Oh, before AR and C, I have no idea, CB. I don't know. It's HP. There's HPQ, Hewlett Packard, and then there's an HPE. Guess which is Hewlett Packard Enterprise. All right, I don't know what the difference is. How can we how we see CAN for 6 months, which is heading higher? Rewrite that, Rohit. Go has a nice fry pan bottom. You can stay long on this one. First target would be probably back up here, so a good percentage move. But right now you would just stay long as this stays above the T-line. And semi, we were going to buy when it broke out through the 50, but then it failed. So here's another aspect that we teach people, that probably about 30% of your trades aren't going to work. But you don't take that personally. I did for years. I couldn't figure out what am I doing wrong. But when I realized that if I bought something and it didn't work, close out immediately, because there's too many out there that are working. Just take your money out of the bad one, cut your losses short, and go find something that's going to give you a move like this. Okay, Javier. We did Schlumberger, we did XLK, oil. Oh, I think that's the old oil. Crude oil on the June contract or July contract is right now at 33.51. You can see where it bottomed out here, the bullish harami, and then you kind of your Morningstar signal, your doji sandwich, your slow curve T-line crunch, Right now, you just stay long. See if it can get up through that level. There you go. Yep. AMAT, we did. Whoops, where did I just scroll to? Gold. Whoops. Gold backed off today. You can see which way gold is going. You had kind of a fry pan bottom, but it failed at this level. So this is exactly what these signals tell us. Either we're breaking out or we failed. I wouldn't be long or short gold right now. Let's see. We did Apache. Apache needs to stay above the T line. We did Schlumberger. Schlumberger looking for this to break out through this level. Facebook. Look at your J-hook pattern again. Look at kind of your bobble breakout. Look at your kicker signal breakout. Right now you did a dark cloud, or not a dark cloud, but a dark candle in the overbought condition. I would have a safety stop, maybe at yesterday's open, because it's really not doing a signal. But that I wouldn't want to see it come back down through that level. That would tell me the bears have taken control. Okay, that's oh, the Hunt brothers. Yes, I can remember when they were. I can remember when gold jumped from 200 to, was it 800 in 2 or 3 days, and everybody said, "Oh, gold is going to 2,000," and because there wasn't any gold left, or it was being used up, blah blah blah. Well, it came back to 200 and stayed there for the next 15 to 20 years. So that's when I learned you never listen to the so-called experts. You let the market tell you what the market's doing. Tweezer tops. The exact level is equal. Now, here you can see how every time they took it up, they knocked it down, knocked it down. But if this had come right up here to that level, that would be called a tweezer top. Callaway. Look at your Morningstar signal, your scoop type pattern. Where do you think your next target's likely to be? Up here. How long do you stay in? As long as it stays above the T line. Let's see, ARVN. Oops, I kept you way past. ARVN, you can stay short, yep, or you can short it on weakness. Look at your big doji shooting star, bearish evening star signal, close below the T line. How long do you stay long? Until you see a buy signal. Yeah, it's almost bedtime. Let's see, silver we did, or did we do? Silver backed off a little bit. SAIN. Silver did an evening star signal on the July contract. Now you watch to see whether it can hold right in this level. The inverted hammer is an extremely high probability, but it doesn't occur very often. So even though it's a high probability situation, its frequency is the lowest of the 12 major signals. Okay, so here's Hewlett-Packard Company, and here is Hewlett-Packard Enterprises. This one looks like it's about ready to break out. Pamela, I would Pamela Dunn, where are you from? You weren't from Pittsburgh, were you? Shopify. Oh, Pamela, the book is High Profit Candlestick Patterns. It's the second book that I wrote. I don't remember when gold was at 30. I don't think I remember when gold was at 30. Oh, was that back during Nixon? Shopify. Wave 1, there was your bobble breakout. Wave 2, there was your morning star type signal. Wave 3, now you're starting to gap up a little bit. I would have a safety stop just below today's low. And Penn, there's kind of your breakout through this level. There was your gap up through the 200. Right now you stay long, but as soon as you get in the overbought area, your safety stop goes at the previous day's open. Logic says it shouldn't come back down through that level. Oh, this one, you can see the wedge. I wouldn't be long or short, but I'd watch to see which way it breaks out. Let's see, we did this one, ARCN. No, that one's not coming in, Jake. I don't know why. Sometimes this system does that. Oh, Marianne from Mount Lebanon, all right. Sandy and I get over there occasionally. There's an antique shop, big antique shop on one of the corners over there, and I can't remember. Okay, last one, SNBR. Wedge. If you're long, you can stay long. Is that what I've done? ARCN. And I should be doing ARNC. Both coming up that way. Sleep number, perfect Henry. Okay, oh, I didn't even, did I give? Yeah, it's still in a wedge. Vic, we've done XLK at least 3 times tonight. It's backed off a little bit. You can stay long as it stays above the T-line. Okay, we've still got some good trade setups out there. Try to figure out which one I was going to go after. I need to mark them down because I can't remember. Darn. So anyways, they'll be in the members area. Oh, yeah, somebody just probably try it. The worst case scenario, it's $97 a month. We have the chat room open every day. We have 2 chat rooms, one for the option trading, one for the regular or for stock trading. And you get a lot of information in the chat room, meaning there's lots of people in there that are very good at spotting good trades, and it's a good place to ask questions. I put out 2 or 3 stock picks every night. Dropbox looks like it's trying to do a J-hook pattern. And about once, if not twice a week, we would do a special training session for members, like how to scan for the best trades, or how to set your stop losses using the logic of candlesticks, entry strategies, when to take profits, all the things that have common sense built into them just from the graphics. QCOM, Chris, I wouldn't be long or short this one right now. That's a nothing chart. Did I just do Alex, not say anything about it? Yeah. This is one with a little left-right combo. You can buy on positive trading up through the 50. I think we did CVX. CVX, slow uptrend, nothing wildly exciting. Last one. This is the last one. This one you can get ready to buy with the expectation that if it opens or trades up above the 50, they're coming back up to top or test the top of the channel. Okay, everybody. Hope you got some good information tonight. We will see everybody bright and early in the chat rooms tomorrow. We'll see you then.